Welcome back to Yahoo Finance Live, everyone. Berkshire Hathaway's first annual meeting with shareholders in person since 2019, that's since COVID, is this weekend. For a preview, let's bring in Greggory Warren, Morningstar Senior Stock Analyst. So obviously an important one here. Talk about the significance of this year's meeting.
Well, I think it's important for them to do in person again. I think the meeting misses a little bit of that interaction between Warren, Charlie, and the crowd. And plus, this is also the first year we'll actually see Ajit Jain and Greg Abel up there on the stage with Warren and Charlie. We've been doing it via streaming in the past 2 years. I think it just misses a little bit of something, not having them up there.
So then what do you expect the bulk of the questions to focus on?
It'll be interesting. I mean, there's going to be a lot of different questions. A lot of sort of recent topics will probably come to the forefront. The purchase of HP, the purchase of Oxy, the Allegheny deal, some of the comments and questions about crypto, the economy, of course, inflation. I mean, a lot of those things will probably be at the forefront. Me as an analyst, I've got my own sort of priorities. I'd love to hear more questions about Geico. Todd Combs has now been in charge there for 2 years. Greg Abel's been overseeing the non-insurance operations for 3 years now, so is Ajit. So kind of interested to see what their take is on Geico, which has really sort of struggled relative to Progressive the past few years. The same with Burlington Northern. They're really kind of trailing behind Union Pacific on a profitability basis. I'd really love to hear more questions about those businesses and what these managers are doing as they look at it and what they like to sort of see improve over time.
Now, it's interesting because as we're seeing, Berkshire shares are beating the market up 9%, say, versus the S&P, which is down about 12%. But as you look at the momentum and the size of some of these deals recently, you mentioned Occidental Petroleum, HP, Allegheny, and this is after a 6-year break. What does all this tell us about what Berkshire Hathaway is prioritizing?
Well, it's interesting because they have a cash problem at the end of the day. I mean, they're generating probably 25, 30 billion in free cash flow this year. If you take all three of those transactions, you're still going to not match what they've been doing on a free cash flow basis overall. And Buffett a few years back at an annual meeting said he could hold $150 billion in cash and convince shareholders he and Charlie are doing something brilliant by doing that. So I think that's sort of been a threshold for them that they're trying not to keep the cash balances from getting too high. And, the past 2 years, share purchases, they've been buying back about $6 billion a quarter, and that's been sort of the outlet. A little bit harder with the stock sort of, increasing in value here this year. But I think they found some opportunities. I mean, Oxy, they did a deal with them a few years back where they offered up some preferred stock. And got warrants, as part of a transaction deal. They were doing these base funding for an acquisition. And HP is another one that, it's not Apple, but it is, sort of a good, steady free cash flow firm paying a good dividend, buying back stock. And then Allegheny, I mean, all three of those transactions, we like Allegheny the best. We think that that's a really good deal for them. There's a lot of opportunity for them to eventually find growth within the premium side of the business to sort of reduce some of the expense loads. But also to put a lot more capital to work.
And I want to ask you, because obviously we heard Warren Buffett say that the power auction lunch with him will be the last, calling it this grand finale event. What do we know about whether this will signal the end of an era, and anything that you know about perhaps any succession plans when you look at Munger and Buffett?
I mean, they're both getting up there. They're both well into their 90s now. And Charlie's a few years older than Warren. I think it's gotten to the point where they cut back. I mean, they gradually cut back on activity the past 5 to 10 years, and really sort of pulled back from different obligations. So I think that's part of it. I think COVID has an influence as well. I mean, it's just we're not really sure when we're going to get back to a lot of in-person things, over the long run. But I don't think it really sends a message wrong. Who the next CEO is going to be. They sort of let it out of the bag last year during the course of the meeting. Greg Abel's going to take over. But I've always sort of felt that, Warren probably is not likely to walk away from the business. If he does anything, he might step away from the CEO role and let Greg take over the day-to-day, but he'll stick around. He's just the kind of guy. He loves some of the work. He loves what he does. So it's really hard to sort of find an argument for him to sort of retire and walk away from Berkshire overall.
You can definitely tell he does love what he does. Thank you so much, Greggory Warren, there, Morningstar's senior stock analyst.